Let us start with chapter number 1, that is Introduction to Accounting. Various authors, various governing bodies and accounting bodies have defined accountancy in their various ways, and most of these definitions cover probably all aspects of accounting. Let us understand few of these definitions. A very simple definition of accounting is that accounting is a language of business. Language of business. That is very apt because business involves a lot of transactions which are in terms of money. It involves a lot of exchanges of money. So to take care of that, the process that is involved is accounting. Another definition of accounting has been given by American Accounting Association. American Accounting Association. As per this definition, accounting is a process of identifying, measuring, and communicating the necessary economic information to the users of accounting. That is, accounting is an art of identifying. We identify which transactions ought to be recorded. Then we measure them or transform them into terms of money and communicate their result, that is the profits, losses and the other informations, to the people who are interested in accounting. So this involves the complete process of accounting, that is to measure it, to identify it and to communicate the information to the users. But students, probably one of the most widely accepted definitions has been given by AICPA, that is AICPA. It stands for American Institute of Certified Public Accountants. As per this definition, accounting is an art of recording, classifying, summarizing, interpreting and analyzing the transactions which are in terms of money, or which are capable of being expressed in terms of money. So as per this definition, various steps that are undertaken in accounting are covered. It says that accounting is an art of recording. There are n number of transactions which are there in a business in a day. So there is quite a possibility that accountant might forget to take note of these transactions. So it is recorded. Obviously, recording is done not just by merely writing. It is done by applying proper rules of accounting. Then whatever we have recorded is classified on various bases. The basis of classification can be into various accounts or various events. Then summarizing, to get out a meaningful information out of classified information. And once all these three steps have been done, then to interpret and analyze the results of these steps. That is, any business is undertaken with the motive of profit. So in this step we calculate profit and analyze how can the performance of the business be improved. And it goes on to say these steps are to be applied only on those transactions which are in terms of money.